In a global economy that's always on the move, the US dollar's long reign is, well, it's facing a quiet but really significant challenge. And smack in the middle of all this is India, pulling off this fascinating balancing act between trade, resilience, and its own strategic independence. Okay, let's get into it.
So, that brings us to the big question we're tackling here. Is India really moving beyond the dollar? And the answer, you'll see, is a lot more nuanced and, honestly, way more interesting than a simple yes or no.
To really get what India is doing, we've got to zoom out first and look at the bigger picture. Because what's happening isn't some sudden revolution. It's more of a subtle, worldwide shift in how countries are thinking about their money.
And you can see this trend right here in the data for global reserves. Central banks are slowly but surely diversifying. The dollar share is projected to be just under 58% in early 2025. Meanwhile, currencies like the euro are gaining a bit of ground, making up over 20%. Now, it's not a dramatic crash for the dollar, but it is a slow, steady drift.
And get this, it's not just the heavy hitters that are seeing a change. Take the Swiss franc. Its slice of the global pie has quadrupled. That's its highest level in more than 2 decades. This is a huge signal that central banks aren't just looking for one big replacement for the dollar, they're spreading their bets everywhere, even to smaller, more stable currencies.
So, what's driving all this? Well, a few key things are really pushing countries to act. Geopolitical tensions are, of course, on the rise, and the frequent use of U.S. sanctions has made a lot of nations pretty nervous about relying so much on the dollar. For some, it's just gotten too risky to keep all their financial eggs in that one American basket.
Another piece of the puzzle is happening right in the U.S. Treasury market. With bond yields hitting peaks around 4.4%, it just becomes more expensive for other countries to hold dollar-based debt. This financial pressure basically gives everyone a very powerful reason to look for other, more stable ways to manage their finances.
Okay, so with that global scene set, let's zoom right back in on India's specific game plan. The country isn't making some radical break from the dollar. No, its approach is much more careful, deliberate, and, above all, pragmatic.
And hey, we don't have to guess about this. The Reserve Bank of India has been crystal clear. They've stated, quote, de-dollarization is not a stated objective. This is such a crucial point. India is not on some grand mission to bring down the dollar.
So, if it's not de-dollarization, then what is it? The term you need to know is de-risking. Think of it like risk management, but for an entire country's economy. It's all about lowering your exposure to currency swings and political pressures by using smart tools, not by trying to dethrone the world's main currency.
And the difference between these two ideas is just massive. De-risking, that's India's playbook, is pragmatic, it's gradual, and it's about managing risk. De-dollarization is a whole different beast. It's aggressive, it's political, and the end goal is to completely replace the dollar. We're talking about two totally different philosophies here.
Now here's where it gets really interesting. De-risking isn't just a defensive strategy. It has a proactive side. And that's all about making the Indian rupee a much bigger player on the world stage.
And this isn't just some policy paper idea. It has support from the very top. Prime Minister Modi himself has said the rupee must become globally accessible and acceptable. That's not just an economic goal, it's a statement about India's growing confidence and its place in the world.
So how exactly is India doing this? Well, the plan has some very concrete steps. First, they're signing more agreements with other countries to trade in their own local currencies. Second, they're setting up special bank accounts called Vostro accounts that let foreign partners hold and use rupees. And third, they're actively encouraging the use of the rupee to settle international trade.
But of course, a strategy this ambitious is never that simple. Pushing the rupee onto the global stage creates some very real economic pressures back home. It really is a delicate balancing act.
And this leads to a classic economic dilemma. On one side of the coin, a stronger rupee is fantastic for importers. It makes it cheaper to buy goods from other countries and to pay off foreign debt. But for exporters, on the other side, a strong rupee can be a huge problem, making their products more expensive and less competitive around the world.
Managing this tension is a monumental job. To give you a sense of the scale here, just look at this. The Reserve Bank of India sold around $40 billion in a single quarter. Why? To stop the rupee from getting too strong too fast and hurting exporters. That is a massive intervention just to keep that delicate balance.
So when you take all of this into account,
The global shifts, India's de-risking strategy, that internal balancing act. What does the future actually look like?
Well, let's be realistic. The dollar isn't just going to disappear overnight. As the Council on Foreign Relations points out here, the dollar is just so easy to trade in huge amounts. It has deep liquidity that it's incredibly tough to replace. Any real shift needs other viable options, and right now, there just aren't that many.
So India's path forward is probably going to look a lot like what we're already seeing, a steady, gradual process. You can expect more bilateral deals for local currency trade, an expansion of the financial plumbing, like those Vostra accounts, and just a continued, careful diversification of its reserves.
At the end of the day, when you boil it all down, it comes to this. In a financial world that is definitely changing, India's main goal isn't about starting some big currency war. It's about building and strengthening its own financial resilience for the future.
Which leaves all of us with a final thought. As the old rules of the global economy are being rewritten, India's strategy gives us one possible answer. But it also brings up a much bigger question for everyone. In this new era, what does financial resilience really look like?